You were listening to chartingwealth.com for Thursday, the 7th of September, 2017. We see that stocks are up for the day, about 0.3% or so, about a third of a percent on both the S&P 500 and the Nasdaq 100 as depicted by QQQ. We also see that bonds are consequently, as should be expected, but doesn't always happen, down a little bit. They're down about 0.61%. Gold also down 0.51%. So let's jump first into the S&P 500 on the weekly chart as depicted by SPY, the Exchange Traded Fund. We see that as far as looking at our weekly chart, we're going to the second week of a green up candle, about the same size so far as the prior week. Now remember, this is a shortened week. It's the second day of a 4-day week, so we're about halfway through the week. Derivative oscillator is still fairly negative. The price percent oscillator is still trending down, although fairly flat, not heading up like it was in the prior week. So we'll continue to keep an eye on the S&P 500. Don't have a crossover yet. If there was significant up movement the next 2 days over Thursday and Friday, there might be close to being one, but we'll just have to wait and see. Now, what do we see going on with the 2-day candle? Well, the last 2-day candle ended on Friday. The latest 2-day candle ended on Wednesday. So it was for Tuesday and Wednesday, and we see that it is a crossover going up at this point. We have a doji that's been drawn over the last 2 days. A doji is a type of candlestick that shows extreme indecision in the market. So even though we do technically have a crossover, a 2-day crossover, and the derivative oscillator's in the green and the price percent oscillator is, well, trending up barely. With this doji, it makes us question everything that is going on. So we shall continue to keep an eye on just what's happening. Don't have any call to make at this point. Let's see what's going on the 4-hour chart. It, of course, is sliding sideways. That's the reason we have a doji, is because there's a sideways slide, very little movement. It is still in an uptrend on the 4-hour chart, has not crossed over going down. Looked like it might be headed that way pretty serious at the end of the day on Tuesday the 5th, but as the day played out on the 6th of September, from the morning through the afternoon, things just sort of slid sideways. So we'll continue to watch. Don't have any trades, anything to make of this just yet. If there's a big down day tomorrow, it could very easily pull that barely crossing over on the price percent oscillator on the 2-day chart over, along with the 4-hour chart. If you have that kind of double crossing going down, I would urge you to consider jumping in and doing a practice trade and see what you learn from that. It would be very interesting to watch. Remember, the weekly chart's still in a confirmed downtrend, so keep your eye on that. Check it, of course, when the 4-hour candle closes at noon on Thursday, and then again at 4, and see what you see. Now, let's go back to the charts. We're going to QQQ, the Nasdaq 100, the tech stocks. It is in its second week of up movement, again up about a third of a percent. Derivative oscillator still negative, but it's getting close to trending over, and of course the price percent oscillator sliding sideways. We see the price percent oscillator, then we see the 50-period moving average, and just above that is our signal line. Everything sliding pretty much sideways. So we'll continue to keep an eye on what's going on there. If we go from that weekly chart to the 2-day, what do we see? Well, we redrew our 2-day trend line again, not the way we necessarily like to do it. We'll switch over and go past that crossover as soon as we can. But just to give us some idea, we've got a red spinning top, again, means indecision also. We've got, and as we, of course, we go and look at that 4-hour chart, what do we see? We see again a sideways slide, a little bit up, more movement up in the morning, and then a doji in the afternoon. Didn't keep coming and crossing over like we might have expected. But what's interesting is we've lost all the energy in the derivative oscillator and it has switched over to negative. So again, keep your eye on what's going on. The Qs may see a crossover going down on that 4-hour chart, but of course your problem is your 2-hour, your 2-day chart is still in a confirmed uptrend. So that's a problem and still that until and unless that crosses over again going down. Now again, let me do just a quick aside here. Remember, we're still in the summertime trading zone. It doesn't end until the end of September. This is the sucky time of year to trade. This is the time of year when things are sort of up and down and sideways, so don't beat yourself up too much if you're having a hard time following, particularly what's going on in stocks. Bonds and gold have been a little bit different, but again, don't beat yourself up. This is the crappy time to trade. Always is. Summertime trading zone because so much of the volume is out of the market, so much of the big money. When it comes back in the fall, that is the beginning of October, things change. Okay, now, and again, we see cleaner, clearer movements. Okay, going back to the charts, going to TLT, going to go to the weekly. What do we see? Nice clean up movement going on 5 weeks. Derivative oscillators continuing to gain energy and the price percent oscillators ticking up. We like to see that. What do we see on the 2-day chart? Well, we see the 2-day chart continuing to trend up. We had that 2-day candle ending on Friday the 1st, was a downer, but then things recovered. Now for the day, TLT was down 0.61%, but again, that's the second day of a 2-day candle. That's why we have that wick on top. Now if we look at our 4-hour chart, what do we see? We see strong up movement in the morning and then a spinning top, almost a doji in the afternoon, so a big pullback there. We'll continue to keep our eye on the price percent oscillator. It did angle down significantly in the afternoon. Derivative oscillator still in the negative. So keep your eye if you're in an up move on TLT. Continue to keep your eye on that 4-hour chart and your trend lines. So we'll continue to watch that. And of course your 2-day, it's all the charts for us at all time periods. So always pay attention to all of them. But again, trends will first be shown on that 4-hour, but again, the 4-hour can oscillate a whole lot more without taking the 2-day and the weekly out. Let's move on. Again, TLT down 0.61%, gold down 0.51% for the day. And of course, gold, we're going in like the 9th week of up movement, strong up movement. Little pullback in gold today, but again, a gigantic green candle well above the Bollinger Band. Strong increase in the derivative oscillator and the price percent oscillator continuing to tick up. We look at the 2-day chart. What do we see? We see that 2-day chart, the 4th candle representing 8 days of strong up movement, well above the 2-day trend line, well above the weekly trend line. Derivative oscillator continuing to grow and the price percent oscillator. As we look at the 4-hour chart, we can of course see that there was a bit of a bleed off in the morning and then things sort of just again a doji in the afternoon. Keep your eye, of course, on this 4-hour chart. It is trending down. We've seen it bounce off numerous times. Of course, we had that 4-hour crossover going up back around the 123 or so mark on Monday the 28th in the morning, jumping in point in the afternoon somewhere around the opening at 123.18, things up to 127.02 at the end of the day, reached the high at 127.78 back at 4 p.m. on Tuesday. So again, if you jumped into that move on the way up on gold, you have done well, Padawan. But be very careful as to not losing it if you have a crossover going down. Could bounce off. We've seen that happen again and again and again on the 4-hour chart. Remember, everything looks beautiful on gold with the weekly trend line up and the 2-day. So just continue to keep your eyes open. See what you see. Make sure to use your trade worksheet to mark down all of your thoughts and patterns and all. The trade worksheet is wonderful. If you don't have that, the daily market worksheet and the weekly market worksheet, Why not, my friends? All you got to do is go to the website, chartingwealth.com, sign up for the daily market review for free. You'll get it emailed to you every day in video. You'll also get in that newsletter links to the How to Read a Stock Chart video, links to all of the worksheets, the trade, the market, and the trade worksheet, the daily market worksheet, and the weekly market worksheet, in addition to the layout that we use at freestockcharts.com. The operative word on all of this is it's priceless, it's free. All it takes is your efforts and your desires. My friends, God bless. All the best from the whole team here at Charting Wealth. You appreciate what we do. Show your love by going to our YouTube channel and subscribing. Subscribe to us on iTunes. You guys have made us as high as like number 4 in the world when it comes to stock charting podcast, and number like 5 or 6 with stock market podcast. You guys have done so much to bump us up in those ratings, and we so appreciate it. Of course, we do it all for you. You have questions, problems, concerns. We're glad to hear from you. CW@chartingwealth.com. And if you sign up and become a subscriber for free at chartingwealth.com, of course, that gives you the quick in on all the new trainings. When we put them out to our members first. So make sure that you sign up. A lot of benefits with that. chartingwealth.com. God bless. All the best from the entire team here.